Support and resistance levels are fundamental concepts in technical analysis, and trading based on them is a common strategy. One of the most popular strategies is the break and retest strategy. At its very core, this strategy is simple. I mean, look at this. To take a long trade, you identify a resistance zone, wait for the price to break and close above the zone, and then enter a long trade on its retest. For a short trade, identify a support level, wait for the price to break and close below the zone, and then enter your short trade on the retest of the zone. Simple, right? However, if you are a beginner trader, identifying these support and resistance levels and waiting for the break and retest can mean hours spent glued to your charts. But what if there was a simpler and easier way? Well, in today's video, I'm gonna show you a more objective approach to trading break and retest using a specific Tradingview indicator. If you end up finding this video helpful, remember to leave a like. Let's get into it. Now, to incorporate this indicator on your chart, start by heading over to tradingview.com. If you're not registered, you can find the sign up link in the video description. Then once you're in, choose any forex pair or trading security of your choice. For me, I'm gonna be using the 5-minute time frame of GBP/JPY. Then open the indicator search tab and type in support and resistance signals MTF. Be sure to select this one by LuxAlgo. Now, this indicator is a technical analysis tool designed to identify and highlight the support and resistance levels and the associated price action signals, such as breakouts, tests of the zones, retests of the zones, and rejections. Now, let's break down its key features and functionalities. You see this green zone? This represents a support level. Essentially, a support level marks a price point where a downtrend might pause due to a surge in demand. Conversely, this red line signifies a resistance level. This is a price point where an uptrend might pause because of increased supply. Now, a unique feature of this indicator is its adaptability. It can transform support into resistance and vice versa based on the price movements. To illustrate this, notice how the red resistance level seamlessly transitioned into a green support level once the price ascended past it and subsequently bounced off. In a similar manner, a previously established green support level later became a resistance zone after the price ascended beyond, only to bounce off it at a subsequent point. Now, let's shift our focus to these text labels found at the support and resistance levels. What exactly do they signify? First, there is the B label, which stands for breakout. Now, you may be thinking,
but what exactly is a breakout?
Well, a breakout occurs when the price moves beyond a support or resistance level, signaling a potential shift in trend. Next, the R label represents retest. A retest is when the price surpasses a zone, either support or resistance, and then returns to touch it again. Lastly, we have the T label, which indicates a test. A test is when the price comes close to or touches the support or resistance zone, but doesn't necessarily cross them. Next up, notice this green and red up and down arrows. This symbolize rejections, more specifically price rejections. A rejection is showcased by a pin bar pattern, a specific type of candlestick characterized by high trading volume and huge wicks at the top for a bullish pin bar, and vice versa. When you spot a rejection, it often signals potential price movements in the direction of the rejection. Let's now address these orange and blue zones on the chart. These zones signify liquidity grab areas. Specifically, the orange zones represent buy-side liquidity grab, while the blue zones represent sell-side liquidity grab. Now let's delve deeper and explore these indicator settings. Detection timeframe. This feature lets users view support and resistance levels and their associated signals from broader timeframes, even if they are currently analyzing a smaller timeframe. This is going to be helpful for grasping the market's bigger picture. For our strategy, we're going to align with the chart's time frame. But just to showcase its versatility, you can adjust this to maybe the 1 hour time frame. Doing so would reveal the support and resistance levels from that time frame, negating the need to manually switch, a feature I find quite handy. But for this showcase, we're sticking to the chart's current time frame. Detection length. This parameter sets the length to pinpoint swing highs and swing lows, which are crucial pivot points in the market. For this video, we're going to reduce this to 15. Support and resistance margins. This determines the width of the support and resistance zones. Then here you can easily modify the colors of both lines and the zones to better suit your chart aesthetics. This checkbox lets the indicator revisit and assess past support and resistance levels. However, for our showcased strategy, we'll leave this option off. Manipulation margin. A setting of 2 indicates that the manipulation zone will have a width that's double that of the associated support or resistance level. You can also customize the zone's color to your preference. Avoid false breakouts. By enabling this checkbox, the indicator will only highlight breakouts that surpass the manipulation zone. Breakouts that don't exceed this zone are omitted. For the strategy we're going to be showcasing, we'll activate this feature. We'll also turn off the visible display of the manipulation zones to maintain a clear chart, but this won't interfere with its functionality. Then here we have a few more display settings. Breakouts. We want breakouts to be visible on our chart, so we'll keep the default setting. Tests. We'll disable their display by selecting None. Retests. Crucial for our break and retest strategy, so we'll keep the default setting. Rejections. These aren't necessary for our strategy, so we'll set their display to None. Swing levels. We won't be using them, so we'll maintain the current setting. Now, after all the settings, click OK. Now, before we explore how we can use this indicator to trade, let's talk about Handker Trade. Now, you may be thinking,
and what exactly is Handker Trade?
Handker Trade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly trade gold, and up here you can see that this is actually a live account. The reason why I love Handker Trade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest they can go. For those of you who love high leverage, Handker Trade offers a maximum leverage of 1 to 500. If all of that isn't enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so now you'll have a total of $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to Handker Trade using the link in the video description. Now, back to the video. Now, to enhance our trading strategy with this indicator, it's important to incorporate a trend filtering tool. This step not only crafts a comprehensive strategy, but also filters out potential false signals that may arise. To do this, navigate to the Indicator Search tab and type in Trend Indicator AV2 and select this one created by this Tradingview user. Double-click on it to access the settings panel. On the Inputs tab, change the MA period to 100 and the MA period smoothing to 10. Then down here, you're gonna uncheck the Show High and Low Cloud option. After that, click OK. Now, at this point in time, I know you may be thinking,
But how can we take the break and retest trades using these two indicators?
well, let me show you. To take a long trade, we're going to ensure that the market exhibits a bullish trend to increase the chances of the price moving in the direction of our trade. To determine this, observe the trend ribbon on the trend indicator. It should be colored green with the price trading above it, signaling a bullish trend. Second, within this bullish trend, a resistance level must be printed. To confirm that, we're just going to wait for the market to evolve until a resistance zone is printed. This represents the resistance zone. Next, we need the price to break and close above this resistance level. The confirmation for that is going to come when a B label indicating a breakout appears on the chart. After the breakout, the price should revisit this resistance level. We'll let the market progress until a retest label gets printed on the chart, marking the retest. Now, a crucial aspect to consider is the timing. This retest should emerge at least 3 candles after the establishment of the breakout candle. If it's printed in less than 3 candles following the breakout, that setup becomes invalid. After the retest, we're gonna wait for signs of bullish continuations, such as an engulfing candle, and then we're gonna enter our trade. As we can see here, all our entry conditions are met on this candle, so we're gonna enter a long trade here. The stop loss is gonna be set below the most recent swing low. For the take profit, we're gonna set it at 2.5 times the risk. We let this trade run and take profit. Now, to take a short trade, these are the conditions. First, we're going to ensure that the market exhibits a bearish trend to increase the probability of the price moving in the direction of our trade. To determine this, observe the trend ribbon on the trend indicator. It should be colored red with the price trading below it, indicating a bearish trend. Second, within this bearish trend, a support level must be printed. We're gonna wait for the market to evolve until the support zone is printed. This zone represents our support. Next, we need the price to break and close below this support level. The confirmation for that is gonna come when a B label indicating a breakout appears on the chart. After the breakout, the price should revisit this support level. We'll let the market progress until a retest level gets printed on the chart, marking a retest. A crucial aspect to consider is timing. This retest should come at least 3 candles after the breakout candle. Last but not least, after the retest, we're gonna wait for signs of bearish continuations, such as a bearish engulfing candle. In this particular example, we can see that the retest candle itself was also an engulfing candle, so we're gonna enter our short trade here. The stop loss is gonna be set above the most recent swing high. For the take profit, we're gonna set it at 2.5 times the risk. We let this trade run and take profit. As we can see, this break and retest indicator by LuxAlgo is exceptional in pinpointing breakouts and retest. It's a game changer, potentially saving you countless hours by automating the break and retest identification process. However, always remember, the strategy showcased in this video isn't financial advice. It serves as an illustration of this indicator's capabilities. Always do your own thorough research as well as backtesting and forward testing to have as much confidence as possible before trading live. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.